If you are just a beginner in the stock market, you're in the right place. Today I'm going to share with you the 7 most common mistakes investors make. To be honest, I also made some of them and I'm okay with that because nobody is perfect. Hi guys, my name is Maria and I'm investing in the stock market and in some real estate to achieve my main goal, at least $1 million in 7 years or even less, and I started my journey in 2020. This channel is my online diary, so join me to see if I can reach my goal. Also here I'm sharing with you my own experience and knowledge about investing, passive income, and a little bit about my lifestyle, not to make this channel too much financially boring. So today let's talk about some mistakes in investing. Mistake number 1. Invest in something you don't understand. A real investor never invests his money in what he doesn't know. Of course, you don't need to know all the information about the company in the smallest details. Quite often, some knowledge already eliminates much of the risk of losing money. When you buy stocks, make sure you know what are you buying and why are you making this investment. The easiest way to make research, just go to the company's website and check out all the information they publish for their investors. For example, I want to buy some Apple stocks. Firstly, I'm using such app as Yahoo Finance to see the company's profile with some information there. Then I can visit Apple website also. And every company whose shares are publicly traded has a section for investors on its website. You can learn such things here as investor updates, company news, earnings reports, even dividend history for those companies who pay dividends, of course. So take your time and check out all the information about every company before you're gonna trust them your money. Mistake number 2. Invest all your money in stocks at once. By placing all the eggs in one basket, you will not only increase the overall risk of your stock portfolio, but more seriously, you will be unprotected in the event of any losses. And the problem can be even worse when, in addition to investing only in one type of assets, in our case shares, you buy shares of a single company. So if you will put your money only in one company, the risk will be extremely high. Because if this company faces difficulties, you can lose a considerable part of your investment. So my advice for you here, diversify your portfolio with some different assets. As for me, I also like real estate and crypto. And I'm going to make a lot of videos about my real estate investing and my crypto investing also, so don't forget to subscribe and stay tuned. By the way, if you want to know how to diversify your stock portfolio, you should check this video. Okay, mistake number 3. Buy shares high and sell low. Well, this usually happens because we human beings are naturally moved by emotions, and it's natural that we let ourselves be influenced by moments of euphoria or pessimism. In order not to fall into the trap of always following the crowd, you must act out of your own convictions. My favorite quote here: stock investing is like a roller coaster. You don't get hurt unless you jump off. So if you find yourself inclined to sell everything if your account balance falls a little bit, you are definitely not suited for ups and downs of stock investing. Mistake number 4. Constantly trading stocks. Active trading means choosing to buy and sell stocks quickly and regularly rather than letting your investments lay low and play a long-term game. Well, for example, I'm calling myself a long-term investor. Yes, I do have some different portfolios, even cryptocurrency, and I already made a lot of videos about that. I never sell anything, and I'm quite happy with that. That's my strategy. How to become a real smart long-term investor, you can learn also from some great books, and I will leave a link below for you down in the description. And if you want to be a trader, that's also okay. It's not just my strategy at the moment. Mistake number 5. Blindly follow other investors. Don't listen to recommendations to buy and sell stocks. I mean, you can listen, of course, and watch them here on YouTube, but also you have to be careful because they might act out of self-interest. To succeed as a stock investor, you need to learn to think for yourself and take all the responsibility for your actions. Number 6. Sell the winners and keep the losers. To be successful in a stock market, you have to consider a long-term horizon and to be firm in your goals. Why do most people sell their winners too early and keep holding the losers? Well, usually people sell their winners due to following reasons. For example, they can be short-term traders, so they book profit and exit the stock, or they can be newbie traders and exit a stock under panic of a correction. Also, they can be an oversmart traders, trying to time the market by selling shares expecting a correction to buy back at lower prices. Well, you don't have to worry about it. If you're a long-term investor, your strategy is buy and hold. For example, I'm going to hold my investments at least for 5-10 years, even crypto, and then we'll see. By the way, if you want me to make some more crypto videos, let me know down below in the comments. And finally, mistake number 7. Buy shares of bad companies. Avoid investments in companies that suffer losses because the profitability of the shares is linked in most cases to the profits of the companies. Just think that by investing in a stock, you will become a partner of this company. The tip here is always to ask yourself, will I feel comfortable being a partner of a company that sells products or services of a terrible quality? I would definitely say no. By the way, my top 3 favorite companies for now are Plug Power, NIO and Etsy. I made a video about my growth stock portfolio. If you're interested, just click here and check it out. Please don't forget to like this video and join me in my $1 million journey. That's all for today. Stay safe, take care, see you soon. Bye!